Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your financial market wrap-up for this Monday, the 16th of October, 2017, about 4:20 p.m. Central Daylight Time. Well, another day and three of the indices up, a lot of new highs. We've seen a reversal in the Russell. It did not lose its embedded reading. I was writing this morning. It was on the verge of it. It had an outside day down, which is fairly important, but you know, these stock indices just don't break. And until they break, they don't break. Today was the anniversary of the Black Monday crash in 1987, which at that time I did have a stock firm also. And I remember, if I wasn't gray, it probably made me gray. Never saw a 20% decline in one day in markets, one after the other. It was unbelievable. Gold market reversed late in the day. So while you see a 1303 close, forget it. This market's down around the 1295.5 level. Silver's closer to the low as well. Same with the platinum. Only the copper market stayed super strong, and that's because Chinese PPI came out just super powerful at 6.9% versus a guess of 6.3. If we go to the E-mini S&P and we go to a weekly chart, you're in an up thrust that from this little correction back here in that's March, it hasn't looked back. These other break lows just don't take out of anything of seriousness right up to today's high close of 25.56 on a weekly basis. When you go to a daily area chart, it starts right here. This break low was under that one. And since then, you've not had a break low on a closing basis taking out previous ones. That's the bull part of the market, and this part was from mid-August, in case you're interested. When we look at the action, yeah, it's narrowed in, and what you've lost in the market for a basis for a while is volatility. You just don't get it. You get a step or two like that, but then the market resumes its uptrend and just keeps going without that volatility. It's got a pattern of higher lows, higher highs, markets into new all-time highs. I'm not complaining about it. I'm just telling you that reporting on it isn't the easiest thing in the world other than jumping up and down. Your portfolios are doing great. In looking at the stock market, and not stock, the indices in relation to the 18-day and the 100-day average of closes, by the time you get to the 18-day, because you haven't done it since way back here, you'll be in some form of a correction. It's that simple. It's not a market that can afford, the way that the slope is gone, to get to it without taking out previous break lows. So when it happens, it'll be after the fact that I'll be able to say you're in your correction mode. In terms of Bollinger Bands, you hit them, you go sideways, and then the pattern has been, just like back here, you hit them, sideways, pattern up, sideways, pattern up. Until it breaks the pattern, don't play that it's breaking the pattern. Let it all happen after the fact. You'll worry about it. In the slow stochastics, take a look at the momentum. It has locked in and been embedded since after the first week of September. That is basically 5 weeks, hasn't backed off, and that has kept the bulls fully in control. Now, what do I mean by slow stochastics? Remember, the slow stochastic oscillator is a momentum oscillator made up of two numbers that whip around each other, the red and the blue line, and the red line whips around the blue. Or they just go sideways at times. Well, when they're sideways over the number 80, I say the market is converted from being overbought to locking in a bull trend. When it converts under 20 and they go sideways, both numbers under 20 sideways, I say it's now converted into a longer-term bear trend. And it ends when the red line either gets under 80 on a closing basis or over 20. Until that happens, when you're over this number, the breaks are being bought. That's the theory. Same thing happening in the Dow. This is the slow stochastic reading. I didn't title it here. I just wanted you to be able to see it, how it's working. And once both numbers got up and over it, they just haven't backed off. you're going to see in the Russell how this all changes. That's why I wanted you to see this. The NASDAQ was late to the party on the embedded reading, but not late in making new all-time highs. And here's a market that is trying to lose its embedded readings. See how the red line is now getting only to 81.69. Now, intraday, when this market was close to the lows, and in fact, anything, and I was looking at it real close, anything under 1503.70 today had that red line under 80. You can afford to do it one day, and if it does it the second day in a row, then it said it's lost it, can't gain it back, has to restructure again. What else happened today? Outside day down. So what's gradually been happening in this one index is prices are gradually dropping. The 18-day is coming up. They'll probably meet each other at some point, and that's just a sign that the market's ran out of momentum. Now, this was the first market to go up for those highs. The others followed. I'm wondering if this isn't telling us the other indices might get tired soon. At the same thing, notice how narrow the VIX is. It means there's no volatility. The market's lost its volatility in here. Each time that's happened in the past, let me turn this way, it seems to spike to the upside. When it got narrow here, spikes to the upside. So a surprise comes. Generally, if this goes up, stock indices go down. Maybe that's what the Russell's saying, but I'm not betting on any of that. As long as you have those embedded readings in place, I'm in favor of the market being bullish. On the TLT ETF, the market keeps coming up. Janet Yellen yesterday spoke, and she made it clear at a speech that the Fed is still very much on track for a December rate hike, even without the inflation. This market didn't do much off that news. It seems to be stuck at the 100-day average. It's in an uptrend, which means the market is trying to gain some momentum here. The bonds pulled back with it to the 100-day average, and obviously, the higher this goes, it means the lower interest rates are going. So in a true downtrend, when you got higher rates coming, this market would be falling. So they're all fighting a little bit, but the Fed's been saying what they've been saying a long time. The 10-year notes, which is much more sensitive than the 30, is under the 18-day average, giving us a short-term trading top in here. It was an inside trading day, not telling us much one way or the other. Dollar index, now 4 days in a row, stuck at the 18-day average of closes. Obviously, this is going to be an interest rate sensitive market. The euro currency slipped back under the 18, so the dollar over, this under. They're just mirror images of each other. The Aussie dollar back to the 18-day average, no trend, a lower low, higher high. All these markets are in a waiting mode, with the exception of the yen, which got up again to the upper Bollinger Band and got slammed right down. Look for support at the 18-day average of closes, still in an uptrend. Now, got a letter that you wanted me to talk about Brent. Here's Brent crude oil versus WTI. The important part here isn't the chart as much as the spread between the difference, because we basically, most of us are trading WTI crude in America. You can see how you've still got the overall pattern of higher lows, higher highs. When this market closes back under the 18-day moving average of closes, it'll change the spread to narrowing in a bit. Until that occurs, no, you don't bet against that. Notice when it got over it and started moving up here, and that was in the July-August time frame. That's when the big gain came in the market. When we come to WTI, I think the market's going to have problems again at the upper Bollinger Band, the way it did here. But what's the trend? Up. You got higher lows, higher highs. So until it turns down, it hasn't turned down. Gasoline, even though you close lower, you still have the higher lows, higher highs. And the amazing thing is this has a seasonal to the downside. It's paying no attention to that at all. And we're looking at nat gas, which often has a seasonal at this time down, but it's got higher lows, higher highs. I want to remind you about our pivot points and the beauty of what these pivot points are. It's a way to be looking at the market intraday, looking for support, resistance zones. You might even use it as an aggressive in and out method during the day. I've created 2 videos. One explains the formula. The video goes through it with a PowerPoint. And then I actually lay the charts out with this on that, and you're able to see how the formula works and what the market does. I've begun now recording small vignettes for you to show you how to use this. How do you get it all? Give us a call. You can go to our website, sign up for it for the 2 videos. I'll tell you when the 3rd one is ready, but look at the first 2 right now. Click on here if you're watching YouTube, or underneath us it says click here for Ira's free information. I'm Ira Epstein. I'll see you tomorrow.